What most people are going to do, just about everybody out there, their first step in the world of trading or investing is to go buy a book at the bookstore or get some information on the internet. And the unfortunate thing is, what they're going to end up with is conventional information. And if trading was as easy as reading the books or some information on the internet, I think everybody would be making money. But unfortunately, it's well known that most active traders lose, and most longer-term investors don't come close to achieving their financial goals. The proper way to trade is exactly how you properly buy and sell anything in life. Buying low, selling high, and everybody says that. And but when you look at people's actions in the markets, even short-term traders, longer-term investors, they all do the same thing. They make the biggest mistake, which is, if you think about how everybody's taught to buy into a market, take stocks for a minute. Everybody's taught to make sure it's a good company, make sure they have strong management, good earnings, right? Healthy balance sheet, make sure the stock is in a nice uptrend. Or what do you think the price of the stock is when all those things are true? I mean, those are the mechanics that everybody, invest their hard-earned money in the market with, or trades with. The price is never low; it's always high. What people don't realize is they're taught to buy high and sell low if they follow conventional methods.
So just simple supply and demand equations. It's really about the basics.
Just about the basics. Same way you properly buy things at the grocery store. That's what we want to do, in the financial markets. But everybody does it opposite. Everybody does it backwards. And that's the problem.
So, Sam, how does this notion of supply and demand play out in how you teach people to trade?
What I start with when I work with people is training their eye to identify price levels where willing supply exceeds willing demand. That's where prices always stop rallying and turn lower. And also the picture on a price chart that represents more willing demand than supply. That's where prices stop falling and turn higher. So learning to identify what that picture looks like on a price chart, those are the mechanics that allow you to really buy low and really sell high. But make sure you understand that those terms and what I'm talking about are very different from the textbook version of support and resistance. That's not what we're talking about. Again, there's you go down that path, you're including indicators and oscillators and all these other things, which lag price. An indicator oscillator, just a derivative of price. So if we add anything to our decision-making process that lags price, all we're doing is increasing risk and decreasing profit margin. Again, you would never do that in any other part of your life. Why do it here in the trading world? People think, well, I'm going to get rid of all my indicators, that's scary. But that's what you need to be doing.